Provision accounting is the process of creating an estimated expense or a liability in a company's financial statements, even if the exact amount of the expense or a liability is uncertain or unknown. The purpose of creating a provision is to ensure that the financial statements accurately reflect the company's financial position and performance. There are various types of provisions that can be made in accounting, including provision for bad debts. This is an estimate of the amount of accounts receivable that the company expects to be unable to collect. Provision for warranty expenses. This is an estimate of the amount of expenses that the company expects to incur for warranty claims. Provision for restructuring costs. This is an estimate of the costs that the company expects to incur as a result of a restructuring, such as severance payments or lease termination costs. Provision for income taxes. This is an estimate of the company's income tax liability for the current year. Provisions are typically recorded as an expense in the income statement and as a liability in the balance sheet. The amount of the provision is based on management's best estimate of the future liability or expense, taking into account relevant information such as historical data, current economic conditions, and any legal or contractual obligations. It's important to note that the actual amount of the liability or expense may differ from the estimated amount, and adjustments may need to be made in future financial statements. Therefore, provisions are reviewed and adjusted periodically to ensure their accuracy and relevance.